journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, it's me. I'm back. Okay, I remember. Okay, folks, stay with us here and let's get the charts up and we'll see what we can do. Okay, hold on just a minute. Got a lot of things that are happening here today, and we hopefully will get through with some of them. Okay, let's see how it's all going. I'll make sure the folks can see my charts here. And let's go into what I think is happening today, folks. It's happening again. They did it to us again, just like they usually do, us, whoever us is. First of all, let's go back and remember, we believe that the market is going to go lower. Now, you remember the other day, let's just get this up on remember this, folks. You see that's your 382, miss it by 10 ticks. Let's take a look here at the 4-hour chart in the NASDAQ, okay? Do you remember this was the day where all hell broke loose, okay? This is where the market went up and stayed there all night, right there, okay? And then had the big break. All it's done today, folks, I know it's hard to believe, but it's just done what it normally does. It's a short covering rally, and there's your 382 right there within 10 pips. It's already dropped 200 points off of that. Now, what if we close badly today? That's not going to look very good, is it? Anyway, that's what we're watching. So we'll look at that one. Now, let's take a look at the Russell. Russell did pretty much exactly the same thing that the other one did. If you move over and see here, the Russell made a new low, so you have to calculate the high from the new low right here. That came in at 372. That's where it's trading. It got to 379. Actually 380, it's 370 right now. So that's just another short covering rally. Short covering rallies are very, very fast. You see that one? Bang, boom, bang, boom. How do the markets go up? They go up slowly like this. Bada bing, bada bing, bada bing. They make it easy. That's why the bear market side is fun when you've got something on the, that you can use to help you move it around quite a bit. I've got a special treat here for you folks. You know how I often talk about the cattle market and the fact that it's so heavily involved with the commodity trading advisors and stuff like that. You have to see this. I'm going to just do it this way right now. Okay, here is the cattle for today. This is the hourly chart for the cattle for today, folks. As you see, there's an A, B, C, D coming in here at 208. And there's another A, B, C, D coming in here at 208. And the low was 208.25. And folks, we've rallied 6.5, 7 cents now. 7 times 420, that's $2,800 move in cattle for today. Now, ordinarily, what you want to be watching for is the 382, but I think we went through that easily. Yes, we certainly did. So we know that the market has made a change here. So the first thing I do when I see that happening this morning is after the market runs, I look for, guess what? I look for that 382 pullback. And son of a gun, just take a look at it. There it is right there. Right after the open, market comes down for about 15 minutes, goes to a 382, and then takes off. Then it makes another higher high. That means you got a new 382 in. So you'd have to go back and do the same thing with that to see if you make a 382 with that one. And you can see that one is also nearly perfect. And then it's been going up ever since. So those are some of the things that I've been asked to talk about where I think the market is. And since it's a Friday, I'm getting ready for the newsletter. I'll kill all the birds at one side, okay? Here's what we're basing it on. We're basing it on the Bradley model has been working relatively well. This is what it's done in the past from 23, 24, 25, okay? We already know that. So all we're going to do now is we want to see where the Bradley model is right now. And I'm going to bring that up here in just a second so you'll be able to see it. And all I got to do is find this, come over here, and then hit the D, this one right here. and they'll bring it up for us. And there it is right there. Okay, now this is where we were on the 12th. Now, since the 12th, we came down really hard. We made new lows yesterday, made new lows in the Russell today too. But guess what? They've had a really strong rally today. That doesn't mean anything. We're here. We're going there. You're having these real fast rallies like we have, and that's short covering rally, folks, and nothing I can do about that. I sent my complaints in. Why are you letting these shorts run it up so fast? Well, that's the way it is. They make money on the fast side, they lose money on the fast side. So that's all I was watching today. I didn't see any indication of a bottom coming in. I just noticed that the Russell was acting very strong early in the morning, just like we were doing it the other day. Folks, we are coming down hard here. There hasn't been any good news to hit the market in quite some time. And now, we just were up 700, 800 points and the Dow, we're only up 500 now. And this is what, 9 o'clock in the morning? Are you kidding me? Or 10 o'clock in the morning there in New York City? California. All right. Anyway, that's where I think we're going. All right. Now we're not going to get there easy, but we will get there. That's my thing. I'm just looking at all these things because as I watched them unfold today, we get rid of the cattle here. I went through there's your Russell. You can see what I was looking at in the Russell. You saw what I was looking at in the NASDAQ. The NASDAQ went within one or two ticks. Now look how quickly it did that, folks. You had to run here from 390. It rallied 600 points, and it's given back 300. So what if it closes down in here? What's it going to look like? Not too much, I don't think. All right, let's go back to where the fat lady dances and where the money is made, and that is in the gold market. I want to bring this up here and show you the swings in the gold market today. Now, folks, let me just get this out of the way because it's a RSI. By the way, I should tell you what this is. This is an RSI that my good friend Teresa uses because when you're over these key times like that, as soon as this turns, you see, as soon as the red light turns over the green, you're basing it on the timing. So it's not having to do with price. It's based on time. And when that happens, you go long. And so like you can see right in here, nothing really happened. Right in here, nothing really happened. Right in here, it did. You see you have an ABCD coming in right there at the 50%. There's where it turned up right there. So turned up right there, but it still turned out to be pretty good. But look at the ABCD in the gold, folks. Come on, this is really amazing. Look at that, goes to the exact tick, for God's sake. And what we do now, just a little while ago, if you would want to play it from the short side, there was your 382 right there. Just draw it up and you'll be able to see that's where you would be right about there. There's your 382. Okay, that's pretty much it, what we wanted to cover with there. Now let's go over and talk a little bit about the crude oil, okay? Get the crude oil up there. Here's where we are. This was crude oil. See, now this had a rough day today in crude oil. I'll tell you, I sold it, because I was out break even. I sold it up here, okay, and then when it got to here, I went long, and the problem was I put my stop, reverse and go long right there, and I ended up getting breaking even on that. I made some money on this one, and now we're back up again, to get ready where we're going to go from here, I'm not sure. But looking at this on a really short time frame, on an 8-minute chart, you say this is in a flat-out downtrend. You want to be watching for 382 retracements. The fact is, you can see the one here early this morning. This was the easy one, folks. This was talked about in the video that I sent out. It said we're going to be right up there, bada bing, bada boom, and that's had the really nice move to the downside. Then we have another little pullback moving lower. So crude oil is biased. We'll be right back. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, going to go talk a little bit about the S&P and the SPY for our good friend George. Thanks for calling in, buddy. Anyway, you can see here all we've done so far. We only, folks, rallies 120 handles, 180 handles, 200 handles. I mean, this is a really wild, volatile market, and it's going to continue that way. Look at this. We're halfway through the day. We've given almost half of the gain back already. The Dow was up 700. It's only up 450 right now. What if it's like this day? What do you think would happen then? What would it look like coming in on Monday? What if that would be that? If we get that, we got 3 hours to go. Shut the front door and raise the rent. This could be something really nasty. Okay. Now let's take a look at the S&P cash. That's basically is where the big daddy plays because that's real money over there. They're not using margin. They're using real money. We'll get that up here just a second and show you where we are here. QRS, boy, I'll tell you, I got to be the luckiest person in the whole world, folks. Honest to God, I'm sure of it. Here's where we go. There's where we are. Okay, there's the S&P today. Just to show you where we were the other day. All right, now this is the real cash market. Okay, now there was the rally where it was really so strong early in the morning. What was it? Nvidia was going to be blasting. Man, it was on the way. Nothing could stop it any day. And you can see what happened. Now, we're going to look at NVIDIA in just a second, but this is the real cash market where now we're going to do what we usually do, and that's look at the S&P on the basis of a 382. And you can see the cash market did hit it. The futures went above it by about 20 points, but the cash did not. The cash is still, pushing it down, to the downside as we're watching it right here. I see the S&P is still moving lower a little bit as we see, which dropped about 40 points from where we were once before. Okay, now let's get over here and take a look at the bonds. Just want to get up here 1 second and talk about the bonds. Got these new headphones on, and let's get the hourly up, and we'll see where we are. And then we'll switch over to the currencies because there's a couple of things here. Now, we had that big run up this morning in bonds. I'm going to have to refresh all of this because I've been spending all my time with the stock market stuff. So this was the early morning of today. I think today's the 21st. No, today's the 20th, isn't it? Yeah, I lose track. This is the 20th, I believe. Yeah, it is the 20th. Okay, now we've had a pretty big run here, and this was based on what was happening overnight because the market was extremely weak. Okay, now this market took off. Let's just look at it like we usually do. When you get a move like that, folks, the first thing you look for, the very first thing, is to see if it's really got game. And if it goes to the 382, like it did right here, that tells you that it's got game. And now you can see, boom, away we did, up to the upside. Now we made a new high, haven't we? Okay, that fact that we almost made the perfect ABCD right there, ABCD. So we got the new high, so we have to factor that in. Then we put that in. And where does it mark it? Well, it goes a little bit below the 382, goes to the 50%. Well, it went quite a bit below the 382, but there was a little ABCD in there that might have made that happen, but they can't do everything at once. People have been asking me about this 382. I'm going to be doing a book with another gentleman of mine, Richard Rube. I'm going to add, he asked me to, say something about the book, which I will. We're in the same age. We've been doing, he used to run the LA day traders back when they were just getting started, folks. He had like thousands of guys that were there, gave a lecture there a few times, but that's what it did. We made that ABCD right here. I'm just going to be talking about the 382 because it is by far the most exciting thing that I found of all the things that I found, and I found a lot of things over the years. Okay, let's get back here and let's get up and talk about the euro dollar. Just a second. Not the euro dollar, the euro currency is a totally different thing. Now this is over the last couple of days. There's the 13th. There was your 380 retracement right there. Okay, there's your 382 retracement today. It's perfect. A, B, C, D comes exactly down to the 382. This is a very bearish market. We've been saying that, just about every day, and it just keeps going lower and lower. You can see 10 days in a row, we dropped just about $2,000. So that's moving to the downside. So that's why we're bring it to your attention. Now, if we take a look, Mike Moore will be our guest. We've got some great stuff too, folks, because he's been telling us this market for crude's been ready to go lower, and he's been spot on. Let's get up here and take a look here at the British pound. It's also been under a great deal of pressure. And it's actually bounced today. Son of a gun. Now that's unusual, folks. When I follow these things, I can only follow about 4 or 5 things at a time. I do a few more when people ask about it, but that's really what I try to do. Now, you notice this doesn't have the same beauty that the euro does. The reason why the euro is many, many times bigger than the pound. See, the euro's euro versus a dollar is the largest currency in the world. The one after that is the Japanese yen, and the pound is 3rd or 4th. I can't remember which from some of those countries, but let's take a look at that Japanese yen because that had been on fire and it was ready to turn down. Let's just see if it did yet today. I haven't done a thing in it, so let's take a look. And here it started down. A lucky guess, I guess. Now, only so I'm saying that here is where you can see all the way up here. We were following this to the upside, and then we almost got to the old highs. You're going to put up the long-term daily, and you're going to see we're almost to the old highs that we made way back here. See, we just did that right here. So here's where we are on the long-term daily. So I'm just going to get this in here like this. Now, this is where we thought it was going to have a pretty good move. It was down for 5 days, did virtually nothing. Okay, clean out this so we can watch the things unfold, how the market actually operates. See, folks, you can look at Elliott Wave or any of the other stuff you want, but all you have to really do is to follow what these ratios are telling you. Now, this is a very heavily traded Forex exchange, Forex cross rate. Okay, you see that the market comes here, it has the big run up, right? Now, there's your first retracement. Okay, all you want to do is go back to your low and see where the support comes in. It comes in below the 382, stops at the 50%. Now, this distance is quite a bit. That's about $500. Then the market goes up again, backs off another 3 days. Let's see what that one does. Looks like it's also going to be 50%. Make a liar out of me. No, that one's actually 382. Then you go up, and then you make a 1, 2, 3, 4, 5, 6 day correction, right? Well, that means you've got to recalculate because you have a new high, and you've got the low back here. So see if that at 5 days down comes in to the 382. Well, this misses it by wow. Low is 52. Misses about 30 pips, and then doing the same thing. There it is again. Pull it back, and there we go. And this is why I was having trouble up here. Double 1.618. That's what the whole calculation is. You know, get off your soapbox, you meatball. Anyway, this is stuff right out of Gartley's book, right out of Mandelbrot's fractal analysis. That's how these markets repeat over and over again. They're predictable within limits. Not all of them are, but some of them are, and that's why you want to be able to be watching what's going on here. Okay, here we are at time is on the old clock. Let me get up here. Mike Moore will be our guest here in a second. Had two other stocks to talk about. One is NVIDIA, and I wanted to bring this up. I guess I didn't make myself very clear, which doesn't surprise me considering that I will be right back, I guess.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we're on the line with Mr. Mike Moore of Moore Analytics. What are you looking at today, partner?
Thank you, Larry. Can you see my screen okay?
Looking good, Billy Ray.
If anybody needs to get a hold of me, this is where you can do it. So, all right, let's start off with crude oil. Still coming off here. All right. All right, so crude, the trade below 58.95. I said projects this downward, $1 minimum, $5.30 plus maximum. That was from 58.95, and we've come off to 57.38 so far. So we've already attained the minimum. We got $1.53 coming into today, and a little bit more than that. And if we were to trade back above this line right here decently, that would warrant a decent strength. That's going to come in at 58.22. Sorry, 58.22 minus 1.5 per hour starting at 1 o'clock p.m. Eastern Standard Time. But we really consolidated for quite a bit here. So this breakdown, if it doesn't have any follow through and we get back above this line here, then we should see a straight run right back up for these upper levels. This line right here is going to come in at 59.05 plus 0.5 of a tick per hour starting at 1 o'clock p.m. Eastern Standard Time. If we did rally and we took that out, we should run right up to here, and that would set you up for a break above these major lines up in here, and then that would really catapult us further to the upside, probably at least $3 minimum. And then the RBOB, or unleaded gasoline, that's been rolling over. We left the gap open here. We have a real divergence, by the way, between the unleaded gas and the heating oil. Just to show you for a second, in the RBOB to heat spread, we had a massive move down here over these past days. And in the cracks, we had significant moves as well. Hang on one second here. I'm trying to bring up a certain... I think I said in the last show, this shows you the difference between understanding what the RBOB is doing and what the heating oil is doing, because we turned bullish on October 20th. And you can see here, if you were along the heating oil instead of the RBOB on that run up, you would have made $15,500 per lot. Whereas if you were along the RBOB, you would have made $5,000 a lot. Excuse me, in the heating oil, you would have made $15,500 a lot more than what you would have made if you were long crude alone.
Yeah, and repeat that. Is that true?
Yes.
Jeez, 100%. What a leverage.
Yep. So, and the RBOB crack, if you were along the RBOB, you still would have made $5,000 more than you would have in the crude. But this is the importance of understanding what these spreads are doing, and that's what I sort of enumerate further down in the analysis with these little plus signs, these little negative and plus signs right here as to which one you should be long or short, depending on which direction the market's going on. And then also some of the work, I don't get into this in the show, but I do the cracks here, so I have specific projections for these and the RBOB to heat spread right here. So you can see in the RBOB, I got bearish here on the trade below 2071, and we'd seen 269 ticks to that just going into at the end of yesterday. So that's another, $2,690 per lot if you're short that instead of being short the crude, with all of your risks being relatively the same.
Wow.
Anyway, so just a little jaunt there, and you can see here from in the RBOB to heat spread what the difference is here. You're talking 12 grand, a 12 grand difference in a matter of 3 weeks, 4 weeks in understanding which of these markets you should be short or long amongst highly correlated markets. Okay, so the RBOB, we've been bearish in here from multiple breaks. Let me see, get back up in here. Okay. We held exhaustion above with a 195.17 high, rolled over 14.37 cents. It was an exhaustion area we had because I said that we were likely in the last stretch of this move up. We held that, and now we've started into a bearish correction against this. and we've gotten the trade below 189.98. I brought in 9.18 cents of pressure. We also got bearish below 188.44, which I said will project this downward 4.5 cents minimum, 7.5 cents maximum. We attained 7.64 cents, attaining that this morning, and then a little bit more than that today. We bounced off of initial exhaustion here, but we've dipped back below it. So still looking weak. If this was to rally and take out this formation way above here, then that would want a renewed strength. Or if we had a gap open higher on Monday, that line's going to come in at 188.79 plus 0.6 of a tick per hour starting at 1 o'clock p.m. Eastern Standard Time. And the heating oil, let me just go back 1 second. The RBOB, by the way, started to come off on the 11th and started heading down on the 11th. Whereas you can see the heating oil, this is very rare. It didn't start coming off until the 18th. So from the 11th, it still had a big run up in here where the RBOB was coming off. And so understanding what to do in these spreads is absolutely critical for making a lot more money with your risk being relatively the same. Okay, so the heating oil, I said that we were held exhaustion above here and we're starting the bearish correction. And I said that we are now in a bearish correction and trend against 209.69 with areas of possible exhaustion below. And I said the trade below 247.35 projects this downward 17 cents plus. And we've come off down to 236.13 from 247.35. And again, just to give your viewers an understanding of what that means in crude dollars, that's 1,700 ticks times 0.42. That would be the equivalent of a $7.14 crude move from this down. Does that make sense? Okay. You want me to go to Brent?
Yes, sir. Please do.
Okay. So the Brent, oh, and by the way, if this trades back above this line, then it will warrant of decent strength. That's going to come in at 243.57.
I think we got a break coming up here now, Mike. Stay. No, we got 30 seconds. Please go.
All right. That's going to come in minus 0.5 per hour. That just currently is holding in across another rate.
Okay, we'll take a break. We'll be right back with Mike Moore. More analytics, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're back, folks, with Mike Moore of More Analytics. Please continue, my friend.
All right, we're going to jump into Brent. Sound good?
Absolutely.
Okay, so the Brent, the break below 64.37. We're under pressure in here. We've come off down to 61.87 before holding this line. If we break below this line decently and back up through it decently, look for decent short cover to come in. That's going to come in at 61.92 minus 0.4 of a tick per hour starting at 1 o'clock p.m. If we were to trade back above this formation, that will warrant a decent strength for days. That's going to come in at 63.36 plus 0.6 of a tick per hour starting at 1 o'clock p.m. Eastern Standard Time. And that'll likely set you up for a long towards these other big formations up in here. And if we take these out, we're looking for a couple more dollars to the upside. But right now we're bearish, obviously, looking for this to continue to come off. And the gas oil looks like we're leaving a gap open lower on the day. That just broke below a more significant, well, I just rolled this into January. So I'm talking about decent here, which had a couple of good formations that broke below. I said we held exhaustion above at 804.25 to 50 with an 805 high and rolled over 96.25. And then the trade below 769.75 brought in 61 at pressure. And then the trade below 735.50 that brought in 26.75 of pressure. Those are all rolling into the January contract. As you can see right here, this is the break below this formation. Saw a nice move down from that. And then the break below this formation right here, we're starting to see more of that. This is probably only halfway into what we're looking for to the downside in that contract. If the January breaks back above this formation, which is going to come in at 693.91, minus 22 per hour starting at 1 o'clock p.m., that'll warrant a decent strength. You want to take a look at the S&P 500?
Absolutely. Everybody has an interest in that. That's the old ping pong ball.
By the way, I know I'm talking fast. We're going through a lot of stuff, a lot of material we're covering. So if anybody has any questions, and feel free to give me a call and ask off the number or shoot me in an email. Okay. So the S&P had some pretty big swings here. Sorry, I got to pull that over. As you know, if you've been watching the show for a while, we've been bullish since 35.02. We've seen 3,451.75 to the upside. A lot of other bullish calls in here. Those are all on hold. Then the trade below 69.1175 started our four-way into being bearish. You'd seen 386.75 from that. Then we had a number of other bearish calls in here. And then I said that, bear with me one second. The solid trade back below 67.2450 brought in 199.5, and then the decent trade below 67.02. Hang on a second, that's not where I'm looking for. Bear with me one second. I'm sorry, I summarized that up in yesterday's analysis. But basically below here, we were looking for 95 minimum and a much higher maximum. We got 113 down here, and then I said to get bullish when it broke back above these lines, which we saw like 95 from this line, and then I got bearish again on the break back below them. So now we've come off, but basically I was saying, even though we've made some structural inroads to the downside, that we're likely in the last stretch of this structure downward, and that's where I talk about that right here. I said, however, I would caution that although this made significant inroads, structural inroads to the downside, we are also likely in the last stages of the medium time frame move down from the highs with possible exhaustion at 65.40.75, which we're basically holding with the 65.25 even low. If this starts a bullish correction, it should exceed 234 points from this low to the upside. I also said to get long on a decent penetration above this line, which comes in at 65.99.69 minus 1.86 per hour, and decent today 62.5. And I don't think we had a decent right here, right? That's not enough of a decent. Let me just double check this for you real quick. T46. 01. No, that's not a decent penetration above it yet. But if we do get the decent penetration, that should start bringing in further strength. So on to, the next possible exhaustion down below is down here at 64.72 to 64.31.5. All right. And I'd also said in yesterday's post market that after a big down day like this, an encompassing down day, we also often see an up day. So we're starting to see some of that in here. Okay, jump to the gold. Actually, you know what we never did, Larry? We never did the natural gas. Want to jump to that real quick?
Absolutely. We love natural gas comments. Those are great.
Let me see. Forgot. Bear with me 1 minute. I'd shut that real quick. Let's see. Okay, here we go. So the natural gas. Okay, we've been bullish overall from 281.10. We've seen $3.07 to the upside. And one significant recent call we had was above 428.90 projects us upward 310 minimum, 806 plus maximum. We've obtained 634 of that in the D's, and that rolls over into the January. Now in the January, we had gotten bearish here, saw that roll down to here, bearish here again, fulfilled that projection, got bullish in here, but it rolled over here and got bearish. So I'm still bearish right here, but if we take out this line decently on the upside, that's going to turn into bullish again. That comes in at 476.20. Minus 0.8 of a tick per hour, starting at 1 o'clock p.m. Eastern Standard Time. Okay, back to the gold. Unless you have any questions on that.
Yes, sir.
Okay. So the gold, really been kind of chopping around here lately. The gold, we were bearish down into here, then we made a bullish correction, basically held exhaustion here, started to roll over. Fell below this formation here, but did not see any follow through, and now we're bullish because we've broken back above it. It kind of sums it up real quick. I said to get long on a decent penetration or pull back thereafter above this 40.6170. So I'm bullish unless this breaks back down below this formation, which is going to come in at $40.6780. minus 12 per hour, starting at 1:20 p.m. Eastern Standard Time.
Wow.
And then,
Mike, we have a question from one of our listeners, and that is, what is your preference of trading of the three, the oil, RBOB, and crude? Do you have a preference that you like personally?
all three. You gotta trade the one. No, honestly, you gotta trade the one that has the most opportunity for that direction.
Okay, stay tuned, folks. We'll have Mike Moore right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Back with Mike Moore of More Analytics.
All right,
You're on for 2 more minutes, my friend.
I know we get the last 5 minutes, so let me just jump into Bitcoin because I have some major projections in here. So the Bitcoin, we were bullish overall from 16,275. We rallied 110,965 per coin. A lot of other bullish calls in here. Then we turned overall bearish on the break below 124,228. Obviously with bullish hedges against that along the way down. We've seen 43,478 to the downside. But more recently, I just wanted to highlight this right here. I said the trade below 97,925 now projects this downward 37,000 plus. So that's a pretty significant projection to the downside. That's more than a third of the market cap. And we're 17,175 into that, and even a little bit more today. So I'd be aware that it does have large downside potential. if we were to rally up through some of these lines up here, that would change the picture. More importantly, this line right up in here, that's going to come in at 98,735. Plus 7 ticks per hour starting at 1 o'clock p.m. Eastern Standard Time. If we were to break above that, then I would look for a strength for days and possibly even a run for the highs of the market. I would also be aware here, I'm just going to scrunch this up for a second, that we're in a bearish correction against this general move up from 14,925. We've hit in this initial exhaustion level in here, but it's too early for one of these to really hold more than temporarily. So we may see some big swings here for a little bit before we dip down and test even lower levels in this market. But like I said, if we get back above this line, I would expect that this would rip right back towards the highs and probably even higher.
Mike, thanks for joining us, buddy. We'll have you on again soon, okay?
Thank you, sir. Take a look in your chat box. They sent an answer to that person.
Okay, thank you.